Hey, good morning, everybody. Today is Thursday, April 7th, 2016. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Let's start today by taking a look at our spectrum analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI's High Growth Stock Investors Spectrum Analyzer to identify market leadership on a daily basis. Yesterday, of the top 100 stocks in the most powerful industry groups, 13 came from biotechnology, 7 came from specialty pharmaceuticals, 5 came from medical devices, 5 from commercial and residential building equipment and systems, and rounding out the top 5, we had large pharmaceuticals. These may be good places to look for leadership in this market. Let's start today with the Nasdaq Composite. Yesterday, the Nasdaq was up 76.79 points, or 1.59 points. We closed at 49.20. Importantly, we recaptured resistance right here in the 4900 area, and we recovered all of the ground that we lost on Tuesday. Trading volume yesterday was higher than the prior day, still below average, but higher than the prior day. For you followers of William O'Neill, we are in a confirmed uptrend in the market. We have been since February 18th. We have 4 distribution days in the past month. That's an acceptable distribution count. Investors Business Daily, or IBD, has 5 distribution days for the Nasdaq Composite, and 5 distribution days in the past month is beginning to be a lot of distribution. So the bulls may want to be a little bit cautious here. Right now, the Nasdaq is bracketed by support down here in the 4900 area and resistance up here around 5164. We've been struggling with this 4900 area. It's worth making a note of. We want to put that behind us with a little bit of conviction. In the meantime, if we fall below that area, we hope that we can hold the 200-day moving average. Our market timing model is indicating a buy signal. Let's take a look at the S&P 500. But before we do that, let's take a quick look at the market. Stocks rebounded on mixed volume yesterday, all but erasing Tuesday's declines. Trading volume was higher on the Nasdaq, giving the Nasdaq an accumulation day, but lower on the New York Stock Exchange. An accumulation day is a trading session when one or more of the major averages trades higher on higher trading volume than the prior day. Accumulation is a sign of institutional buying in the market and is bullish. The fact that the New York Stock Exchange didn't confirm the Nasdaq mitigates the relevance of yesterday's accumulation somewhat. That noted, our market timing model is on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Our universal watch list is beginning to look a little bit healthier with 37 names. In a healthy market, we'll generally see between 50 and 90 stocks on the universal watch list. In spite of the elevated distribution count on the Nasdaq, we remain cautiously bullish on the market. If the market remains healthy, the number of stocks in our universal watch list will continue to increase. Advancing issues topped decliners by a 3-to-1 margin yesterday. The New York Stock Exchange advanced decline line continues to look bullish. New highs bettered new lows. Of concern for the bulls, the McClellan oscillator remains in sell territory. The McClellan oscillator is the first of our indicators to go negative on the market. According to our Ramosi ratio, large capitalization stocks bettered small again yesterday. They continue to outperform on a 10-day moving average basis. Bulls would have preferred to see small caps outperform. The market remains bullish, although the McClellan oscillator and our distribution counter indicating that the market may be a little stressed here and in need of a short-term correction. Traders may want to take advantage of any weakness that develops in the market to add to or tweak their portfolios. That noted, be careful, and as always, keep your stops in place. Yesterday, the S&P 500 was up 21.49 points, or 1.05%. We closed at 2066. Note, we found support down here in the 2044 area, which is right where we would expect to find it. Trading volume yesterday was below average, and it was below the prior day. And so the S&P 500 didn't confirm the accumulation on the Nasdaq. The S&P is in a confirmed uptrend. Right now, we're bracketed by support down here in the 2044 area and resistance up here in the 2116 range. Our market timing model is on a buy signal. As we noted earlier, a buy signal indicates that both aggressive and conservative traders can buy at this point, but we shouldn't be increasing margin. Before we go, I want to take a quick look at 3 stocks. First stock I want to take a look at is Vulcan Materials. Vulcan produces construction aggregates, asphalt mix, and ready-mixed concrete for the construction and paving industries. The stock's been working on this first stage base with a pivot point up here in the 106.84 area. We get a 68% checklist rating, and yesterday the stock broke out of this consolidation base, or you could call it a cup base, doesn't really matter. We can call this a cup base, or we can call it a consolidation base. We tried to break out of that base yesterday at the 106.84 area. Trading volume didn't meet our 140% of average daily volume criteria, and we fell back into the base, closing just a little bit below our breakout level. Vulcan may be worth keeping an eye on here for conservative and aggressive traders. We'll look for it to break above that 106.84 level on at least 140% of average daily volume. Next, let's look at Acuity Brands. Acuity is a holding company engaged in the production of lighting products for the industrial, commercial, and residential markets. They came out with earnings yesterday and gapped out of this cup with handle base with a pivot point in the 122.85 area. Closed right at the high for the day. Acuity may be of interest to very aggressive traders at this point. Notice how the trading volume yesterday was huge, well above the 140% of average daily volume that we look for on breakouts. Final stock I want to take a look at is LGI Homes. LGI builds entry-level single-family homes in high-growth markets in Texas, Arizona, and 8 other states. LGI is working on a first stage base with a pivot point up here in the 3607 area. We get a 64% checklist rating, and yesterday the stock gapped above its 200-day moving average on huge trading volume. We've seen a little bit of accumulation in LGI recently, but importantly, yesterday we traded higher trading volume than any down day in the past 10 trading sessions, which is our definition of a pocket pivot. The fact that we had a pocket pivot on this move above the 200-day moving average makes LGI attractive to aggressive investors here. Maybe worth a look. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call. Drop me an email or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.